Good morning and welcome to Stock Market Today. It's Thursday, September 26, 2019, and I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email to follow along with this show, as well as get daily stock ideas for you to consider. Hits your inbox every trading day before the market opened. So U.S. equities were higher in Wednesday's trading, finishing just off the best levels of the day. Treasuries were weaker across the curve following another move lower in yields on Tuesday. The dollar was stronger versus the major crosses. Gold finished down 1.8%. WTI crude down 1.4% amid faster Saudi output recovery and a larger than expected U.S. inventory build. And as we get to the desk this morning, futures are slightly higher, up 20 basis points on the heels of a mixed session in Asia overnight. European markets are trading higher this morning. Treasuries are stronger with the curve flattening. The dollar is stronger versus the euro, but lagging on the yen. Gold is up 30 basis points. WTI crude is down 20 basis points. Check out the S&P 500 because it held the top of the support zone once again. Yesterday's action, you can see here, the tail tests the 2950 area that we've been highlighting. We've been highlighting support in the 2900 to 2950 zone. Yesterday, similar to the previous day, we came down, tagged that level, and then rallied. Now, resistance does remain in the 3000 area, and between there really and the July highs around 3030, so still some churning to do, but an encouraging sign when we see support hold, especially when that support hold coincides with the RSI holding the 50 level. That's a bullish sign. It's holding within bullish ranges. Momentum is not breaking down. So that is a bullish sign, especially in conjunction with the fact that Chaikin money flow is bullish as well. So certainly an interesting development here as support continues to hold. Remember what our view has been. We've been telling you for weeks now that as long as we're above that 2900 to 2950 zone and the RSI is holding in bullish ranges, it makes sense to favor bullish and very bullish stocks in leading areas of the market when those stocks become oversold. And what's interesting is now the market is working towards oversold conditions, so you're going to start to see more opportunities on the bullish side of the portfolio. Let's go to the market in a minute now. What are we talking about in the note today to Chaikin Analytics clients? Nasdaq and Russell lead equities higher. Investors look past the impeachment concerns for now, and breadth metrics weaken as stocks hold below resistance. REITs remain leadership in a falling rate world, and futures point to a higher open today, as we said. But let's first start with the power bars. Power bar for the Dow still at 4-4 after it adds 60 basis points yesterday. S&P 500 adds a like amount, 60 basis points or so, 119 bulls to 83 bears. Nasdaq, some nice outperformance yesterday, up 1.12%, but the power bar ratio still skewed in favor of the bears. 20 bullish or very bullish stocks in the Nasdaq for 22 bearish or very bearish stocks. Small cap strengthened, up 1.08% yesterday, 641 bulls, 317 bears. Saw some profit taking in the bonds yesterday, sending yields higher, but you know how I feel there about the path of least resistance. I've given you the level. 10-year yield below 2%, bonds likely heading higher, yields likely heading lower. Tech was an outperforming sector yesterday, and that's encouraging as it is a large portion of the S&P 500. Tech up 1.2% yesterday, 12 bullish or very bullish stocks for 10 bearish or very bearish stocks. Now, our stock of the day comes to us from Banks and Thrifts. Preferred Bank, PFBC, the ticker symbol there, closed at 53.88 yesterday and had a nice day, up 2.5% as yields went higher. Chaikin Power Gauge rating for Preferred Bank is very bullish due to very strong earnings performance and attractive financial metrics. The technicals and the experts are middle of the road. But when we take the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. So what do we have here? Very bullish stock, strong trend, strong industry group, type of name we want to consider owning. And what's interesting here is this is a bank that actually is outperforming. Market and model are in agreement here, been on that bullish rating since mid-June, outperforming since mid-July. Now, we're not quite oversold yet. Overbought, oversold indicator rounding out of an overbought condition and heading towards oversold, but we're not there yet. Chaikin money flow has been a mixed bag for most of 2019, above the rising long-term trend line. So to me, I think this does look compelling as if you're looking for some financials exposure. We haven't been in love with the banks, but that's largely been a rate call. But this bank has been outperforming. So to me, I want to add Preferred Bank to a bullish watch list because it is outperforming. And when it gets to oversold conditions, I want to reevaluate. Add Preferred Bank to a bullish watch list here today, but I think it's too soon to take any kind of action. Let's look at our sector movement now. Movement of the major sectors over the last 5 days. Still a very defensive feel at the top of that list. Utes, staples, REITs, top 3, along with technology. What's interesting here is that if you look at the performance of the sectors over the past 12 months, these are the 4 groups that are at the top of the list. How about 6 months? These are the 4 groups that are at the top of the list. How about 3 months? These are the 4 groups that are at the top of the list. Remember what one of my big overarching theses has been. My thesis has been that in a slowing growth environment, which is what we are in globally, it'll be difficult for rates to go higher. That's playing out, making bond proxies outperformers, REITs and Utes. That's playing out. And at the same time, investors will pay a premium for growth in a slowing growth world. And the best way to leverage that would be technology. So the thesis is completely playing out as far as our view of the world is concerned. Materials, healthcare, comms, and financials are middle of the road. Discretionary industrials and energy at the bottom of the list. And energy just continues to be a group to avoid. They couldn't rally with the spike in oil. Now oil's coming in. Fundamentals remain weak in the energy patch. Taking a look at our industry in focus today, mining services. And this one has potential to be a turnaround. And I'm going to say it's early, but it has potential, right? Mining services over the past 6 months has underperformed the S&P 500 by nearly 18%, right? There's no sugarcoating that. That is a disaster. However, power bar ratio, which measures future potential, is very strong. 9 bullish or very bullish stocks here for 0, count them 0, bearish or very bearish stocks. And remember, power bars are forward-looking. Group is currently ranked number 1 of 21 subsectors, moved up 1 slot over the past week. So some of the names that you want to start looking at: Reliance, RS, Alcoa, AA, and Kaiser, KALU, all with bullish Chaikin power gauge ratings. Now let's take a look at XME. You'll see what I'm talking about here, right? It's still early, but there's turn potential here, right? So what I like to do in situations like this is just watch it, monitor it, get supporting evidence that the trend is changing. Take a look at this one here. Neutral ETF power gauge rating, but a strong trend above the trend line, but the trend line is still declining. Still a massive underperformer. We're not there yet. So what we're looking for is the intensity of this underperformance to dampen to the point where it eventually begins to outperform. And we want to see money flow start to come into the fund. We're not there yet, but we could be setting the stage for base building process, right? We actually bounced off of support here. So not a lower low and beginning to turn higher. It's early. Like I said, it's very early, but the fact that the fundamentals, which is what the power bar ratio is telling us, are starting to get into line intrigues me. I'm going to be watching XME closely, right? We've already seen some of the gold miners start to do well. So to the extent that gold and the precious metals are rising in price and that feeds through to the fundamentals for these companies, we want to watch this. This could be a potentially compelling area of the market over the next few months. Not there yet. Let's keep an eye on it. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Marathon Petroleum, MPC, up 8.42% after disclosing that they have a letter from the activist investor Elliott Management. You'll recall that Elliott is the same activist that is pushing for change at AT&T. Well, they're pushing for some change and see a lot of opportunities here at Marathon as well, MPC. So a very smart activist investor is in the name now. It does make it a little bit of an event stock, obviously, but it does have a bullish rating at Chaikin Analytics. So MPC kind of looks interesting to me. CTAS, CTAS had earnings, sent that stock higher by 5.75%. Philip Morris up on news that they are ending merger talks with their former partner, Altria, ticker symbol MO. Nike earnings send that stock higher. Been a controversial stock in and around some of their brand advertising, but that doesn't change the fact that the numbers came in solidly and the stock was up 4% on the day. Netflix up nearly 4%. Didn't see any real news to drive trading in Netflix. SBAC led to the downside, down 3.5%. No real news there. Same with XEC, down 2.7%. No real news there. Managed care stocks were under pressure yesterday. Managed care is always volatile in and around elections. It's kind of it's always a talking point. Watch these stocks here for the next year or so. Humana down 2.65%. INSEE announced that their first patient was treated in one of their trials that is beginning, but that stock traded lower by 2.44%, and Avago priced a convert. Avago, I keep calling it Avago. It's Broadcom, AVGO, down 2.32% on the pricing of that convertible. Now, it's Thursday, so we look at breadth, right? We start with the advanced decline line. So the advanced decline line is beginning to roll over, but it still remains constructive, right? This is the advanced decline line for the S&P 500. So the net advances over a period of time, right? Take the amount of stocks that rise on the day, subtract the amount of stocks that fall on the day, add that to the previous day's amount, and you get your advanced decline line. It's a sign of participation in the market. And really what led us to believe that the market was going to break topside was the fact that the advanced decline line broke out. And interestingly, that even though the market broke below its May highs, right? Market back in August broke below its May highs over here. Advanced decline line never did. Here's the advanced decline line, May highs. Never broke below. So it lent a level of support. That encouraged us. That is what led us to believe, or it's one of the data points that led us to believe that the July highs are likely to be tested. We wrote it and talked about it quite frequently. Now we're starting to roll over here. What we want to see is the market hold above its August highs, while this metric holds above its July-August highs, to signal that there's still healthy participation in the market. And that the market is likely to resolve to the upside, especially if the AD line breaks out ahead. Taking a look at some other breadth metrics, they are weakening as well, but still remain somewhat constructive, right? Top of the chart here, we are looking at the percentage of stocks in the S&P 500 above their 200-day moving average, and you can see it's still healthy, right? Above 60% is a sign that a healthy majority of stocks are trading above their long-term trend lines. And that does remain the case for the 200-day moving average here, right? 70%. Same holds for percentage of stocks above their 50-day moving average. Still down here, still above the 60% mark, so still encouraging, right? But you can see that it's beginning to roll over as the market has faded from resistance. Ideally, what we want to see is we want to see both of these metrics hold above 60% while the market holds above that key support zone that we've been highlighting in the 2,900 to 2,950 area. To me, that would lend bullish breadth confirmation to the price action in the marketplace. A deterioration in breadth obviously would increase the odds that the market will break down below those support levels. So just something to keep in mind. Breadth metrics are weakening a bit, but still remain constructive, right? This is why we watch these on an ongoing basis, because we're trying to catch the turns as early as possible. REITs are leadership in a falling rate world. Now, I've been talking about it for a long time. I've been talking about utilities. I've been talking about REITs, right? We've talked about the fact that these are leading groups, and I know they're not exciting to talk about, but our goal is to find the leading areas in the market and find the best opportunities within those areas. So REITs and utilities, right, not exciting, but I choose to get my entertainment elsewhere. I just want to stick to my process here of finding leading stocks and leading industry groups. And the REITs fit the bill. Steady uptrend above the 200-day moving average. Momentum has not become oversold since the December 18 lows and now holding in bullish ranges. So momentum confirming the price action, and all the while IYR, the US REIT ETF, is outperforming the S&P 500. So we have a leading area of the market. What do? We drill down on its holdings and we find leading stocks that have compelling setups like Weyerhaeuser. WY has a bullish rating. Strong trend, strong industry group, bullish rating met with market outperformance. So market and model are in agreement. Oversold, bullish money flow triggered a money flow buy signal today. I'm featuring Weyerhaeuser as the stock of the day in my note to Chaikin Analytics clients, and I think you want to pay attention to it because this stock follows our process. You can see how easy it is, right? What is the market doing? What are the leading areas of the market? What are the leading stocks within those areas? and you quickly come to a name like Weyerhaeuser. That's going to wrap it up for today, folks. I'll be back tomorrow.